Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox Business, Fox News, the New York Post, with my partner in crime, the granddaddy of data, Bob Sloan of S3 Partners, the man who invented the term, was it actionable calls?
Actionable calls. We have actionable calls. We've invented battleground stocks.
Battleground stocks.
Battleground stocks.
You Google it and
Squeeze score.
Squeeze score. By the way, if you Google these
Momentum.
things,
Short P&L. A lot of things we invented.
and or AI'd any of this stuff, and it doesn't cite S3 Partners as the source, call us so we can call our legal team here at the worldwide headquarters of S3 Partners here in Manhattan.
You don't want our lawyers. They're very tough people.
I know. I don't want anything to do with them.
Very tough.
But you're not a tough guy. You're a nice guy.
No, we're nice guys.
You just hired.
We hire smart, tough people. That's the whole thing.
We should point out that S3 Partners is its data is the number one independent data producer on the Bloomberg network. By the way, I just don't say this because me and Bob are in business together, because we are, right? It's good stuff.
Oh,
it works.
Listen, there's a reason why many hundreds of the most savvy financial institutions in the world use our data as a key input to make trading and investing decisions. It's not an accident that we come on the show and we're right a lot.
It's not because of your good looks and sartorial flair, is what you're saying.
Well, I was going to wear this rather snug white vest, but it didn't look so good.
We went back. If you do that, you'll lose customers, I guarantee. But be that as it may, let me get through. Let's jump in. Go through my stuff before we get to the money shot of the S3 data stuff that we want to highlight here. So I don't have a lot this week, just a couple of talking points. Interesting to know that the arbs are back in playing the Paramount Warner Brothers Contratemp. As you know, Rob Bonta, the California AG, has sued to prevent the deal. Yeah. He's won some interim victories, including getting a very liberal Biden appointing judge, which seems to me that she'll kill this thing in a New York minute. The judge, just to make things miserable for David Ellison, the head of Skydance, Paramount Skydance, the son of Larry Ellison, who runs Oracle, was the money behind the deal, and a friend of President Trump. She delayed the trial to March, which means that there's something called a ticking fee.
A lot of money.
It was part of the deal. If they couldn't close it by a certain time, I think it's October, they're going to start paying $7 million a day. A business day for this, so that's a lot of money. We should point out that the breakup fee on this thing, if they decide to walk away, is $7 billion. Not chump change here. Even for rich people, it's a lot of money. And so Ellison is. So now here's something interesting. You would think that would be the stock should be trading where it was when Bonta first filed, which would be about $25 a share. It's not. It's been creeping up. It's now above $28 or $28.50. I can't remember the exact price today. And, so I've been making my calls, and lo and behold, the ARB desk are betting this thing's going to happen. Yeah. And here's why they're betting it's going to happen. And then I want to get your two takes, because there's a short interest play here. Ellison came out and played real hardball. He said, listen, if we don't start settlement negotiations, he doesn't want to go to trial with this judge, Mr. Bonta, I'm going to move everything out of California. And by the way, I've been to the Paramount lot. It's a big lot.
Yep. And a famous lot.
Famous lot, right? One of the more iconic areas, symbols of LA is the movie industry, and the Paramount lot is right there, right at the top of that pantheon, so to speak. So he is threatening to move out, and I didn't think he was serious. When I first saw the story in Semaphore, I was like, listen, my first instinct when someone scoops me is like, this is bullshit. Right. It wasn't. So I tried to make it bullshit, but it wasn't. It was true. He's definitely thinking of doing this. So that is kind of a big hammer. Even though Bonta said I'm not going to be bribed or extorted. I don't know which is the word for this. I guess extortion.
Or
intimidated, right? Gavin Newsom, the current governor, and the likely governor, Xavier Becerra, who's the Democratic frontrunner, it's a Democratic state, has come out and said, settle please, guys. Yeah. all these all these sort of unions are starting to
They're starting to understand like this is a real thing.
This is real, and the job losses if they leave is tremendous. There's going to be some consolidation if you merge the two companies, but if you don't merge the two companies, those Warner Brothers has gazillions of dollars of debt. I can't remember. I used to know the exact number off the top of my head, but even though let's just say they walked away tomorrow, Warner gets a $7 billion
bonus, basically.
Bonus, right? Okay, so that's good. That ties them over, but it doesn't pay off their debt. Their debt, we're talking tens of billions of dollars. We're talking about a secular trends in this industry, cord cutting. That's even a company that just got $7 billion gift is still going to have to sell.
Yeah,
because they don't have scale.
Yeah.
Paramount, on the other hand, is even worse shape. They have to do something. And so all these media executives on top of all this are looking around saying, well, if they don't let this deal go, where this is survival essentially, and it's not just survival, there's no antitrust case here. We can't do deals. I mean, what deal is Disney ever going to do if it has to?
Right.
Comcast, I don't know, you name
Right.
it. So they're pressuring the governor and Bonta, whoever. So with all that, the stock is creeping up to 20, above 28. It's getting to that 29 level where it looks like, people betting it's going to happen. Yet, it's not a done deal yet. And there is a short interest play. You want to unwind that a little bit?
Well, it's like any other risk arb, right? You're trying to hedge out your risk. You go long the target, short the acquirer, and that's what you do.
We put up a chart of the short interest in WBD because it's fascinating. So the short interest is lower than the stock price, obviously, when you look at this. The percentage increase, right? Up a little bit.
Well, I mean,
last couple of days, right?
Yeah,
but not crazy.
Really. Not really. I think what's more telling is the actual stock price itself. I wouldn't read too much into the short interest, although we put it up here because it is an interesting political story with ramifications for the rest of the industry, like you said.
Right.
All of a sudden, Comcast all these people start looking at this thing and saying, Disney, saying, well, wait a minute. If I want to consolidate and I want to buy something, are you going to do the same thing to me? So I think everybody understands that there's a solvable way to get this deal done.
But he's he's a lefty. He's playing to I don't know what he is. He's playing to the lefty base of the party.
That's fine. But because, what I think people are starting to understand is that, okay, let's say you just say, we're never going to settle. What are they going to do? They're going to spin out something, and that thing will get destroyed.
Well, who would buy it?
And so in other words, like if you're
private
on
equity,
somebody would buy it. Someone would buy CNN
value?
or something like that, or you say, okay, if you're telling me I can't consolidate these things, and that's the case, then okay, fine, we'll get rid of this one thing, and someone will strip it bones bare, and it'll be another Spirit Airlines JetBlue thing. Like this thing actually makes sense because they need each other. Government regulation gets involved, and then all of a sudden, Spirit's now gone.
Right.
And by the way, the crazy thing is in bankruptcy, I don't know if you saw this, is that JetBlue got the best gates out of LaGuardia and other places around the country that Spirit had. So
it helped their competitors.
It helped their competitor,
and it consolidated the industry even more.
More, right? And so you got basically these bare bones things in bankruptcy, and then what good was that?
No good.
So let's just say CNN got spun out of this deal to make it happen. What do you think is going to happen to CNN?
It's still the same shit.
The same stuff.
Yeah.
So it's
or the studio.
Either way,
right?
What do you think is going to happen? So you're just going to have the same thing. It might be even worse. So I watch the stock price. The short interest isn't that. It's interesting, but the more importantly is you seeing the stock price climb, which is confidence that some kind of deal gets done.
Okay, well, I'm here covering it and day by day, and it is a great, it's the gift that keeps on giving. This story, it just never ends. I thought it was ending
for folks like you, So for people that are in media, I mean, this is a daily, constant, hourly conversation because it has so many different tentacles into so many different things, right? So
politics, stock price, shorts, interest, the whole thing,
everything. So
pettiness.
That's why. Well, but also how news is. What is the future state of mainstream media? Right. That's really what's at stake. Oh. And it's a big thing when you put CBS and CNN together. If that's what happens, and you
listen, NBC did it with MSNBC. Why can't they do it? I mean,
And by the way, if you look at MSNBC, you look at Verizon, MSNBC makes a lot of money for them.
Yeah, they do okay.
They do okay.
Yeah.
Right. So,
I mean, it's a niche audience, which is kind of what you want.
Right.
CNN, I think that's what Ellison wants to bring it more mainstream, because you have Fox. Just so you know, most of Fox I'm there is not like the opinion stuff. Most of Fox is pretty much, say, left, right of center news,
Right.
Orientation. Then you got the opinion. I mean, Laura Ingram's. These are all my friends. They're what they are.
Right.
It's like the editorial page of the Wall Street Journal or
Right.
the editorial page of the Times.
Right.
Or the front page of the Times sometimes too. But it's that it expresses an opinion. The news is generally what it is. I think CNN will copy that, but its opinion is going to be more centrist because they're looking for that niche.
Right.
They're going to look for news that basically covers it the way we do. MSNBC covers news through a very progressive prism. NBC News, a little different, but okay. But I'm just saying that I think what they're looking for is a niche. And if without that niche, I don't think they can survive really, because you just get you get blown away by the
ad revenue on cable is going down 5 to 7% a year.
Yeah.
That's a lot, right? Between cord cutting, between content, everything else. So, I think it's just kind of postponing the inevitable for some of these franchises. They're just media's moved on. You mentioned Semaphore, right? And you mentioned, look what happened. Who took over CBS? The mental shift going on and how people curate news, get news, and this is right at the heart of it, right?
Yeah. And I think they want to take that approach, like a futuristic approach. They're smart.
Right.
The guys running Redbird are really smart. Redbird Capital is their partner in this, Jerry Cardinal, and he's got a lot of smart people. Hey, Jeff Zucker works with Redbird too.
Yep.
The old CNN chief. He's a smart guy, and a lot more. So they get it. I think David Ellison gets it.
For sure.
And I think they're just fucking. They're screwing themselves. I mean, meaning Bonta and company, because it's either do this or die.
Yeah.
This industry is going to die if you don't innovate, if you don't allow the markets to innovate. And part of consolidation is allowing the market. And it gets brutal, it gets nasty, but the alternative is is not good.
No, terrible.
It's really, really horrible.
You'd be selling, TV cameras and
it's just like,
and TV licenses.
And by the way, you'll be out of business,
distribution rights.
or you're out of
And you're
business, and
out of
that's good for
business.
nobody.
No.
And I don't mean like Chapter 12 reorganize. I mean, like, this is like the stuff that leads to Chapter 7. I mean, I've had arguments with people about AMC. Like, would they have been better in bankruptcy? I'm not talking about Chapter 7. I'm talking about Chapter 12. And I always thought that the whole 8 movement delayed what should have happened in bankruptcy, would have wiped out equity. Bondholders would have
come in and reconstituted
the deal,
or get new management or whatever.
and you start from scratch without a lot of debt, and that company might have been in better shape now than what it is, instead of just constantly diluting the shareholders and getting lifelines on a stock that is never going to make that. It's just so diluted at this point.
Yeah. No, I don't know. I just take the stance that, like, the market's moved on, right?
Yes.
Let's talk about the bond market, because that's where the action is right now.
Now, I can't figure this out, Bob, and you help me out here.
$40 trillion worth of debt can't be
$40 trillion. Okay, so now how many trillions of debt did we have in 2002? I bet you it was.
Zero.
No, we had debt.
It was balanced.
No, the budget was balanced.
The budget was balanced,
right,
and they actually started retiring the debt. I want to say it was like $1 trillion.
Yeah. Okay. So imagine if we had $1 trillion. Okay. So we had $1 trillion in debt.
I don't even think it was that much.
Look it up. But while I make my point, in 2002, interest rates are the same as they are today, almost on the 30-year.
30 was over 5%, right?
And in 2002.
Oh, 30-year 2002, over 6%.
Yeah, that's what I'm saying. They're virtually the same.
Yeah, over 6%. I'm pretty. Yeah, I think that's right.
So why is everybody freaking out if this is normal?
Because rates have been low for so low,
Yeah, but that was all
low for so long.
artificial. That was QE and
Doesn't matter.
and
People
this,
used to it. Doesn't matter. People used
and
to it.
it's artificial.
We have dampened the noise in interest rates and bond market for a long time. Yes.
So we've prevented the self-correcting.
Bless you.
Sneezing to the truth there, Bob. The self-correcting mechanism on fiscal profligacy.
Let's see, debt to GDP ratio.
I'm just saying that
2002.
I don't. All right, but
Our
that's
crack producer
Yeah.
has told us that we were about 6 trillion. in
okay. Now we're
2002.
40.
Yeah, now
Yet
we're
interest
40.
rates are the same
More or less.
on the 30.
Oh, I don't remember what they were.
No, they were about the same.
I'm going to say it's about the same. I remember rates being 3%, so more or less
Yeah.
the same.
So why?
Why everybody freaking out?
Why are people freaking out?
Because you have a whole generation of bond traders that have not seen a steepening yield curve in the way that is steepening now, and have never dealt with inflation. Think about it. People since 2008, it's a long time, 18 years. What do you think? Wall Street's like professional sports. People don't survive very long.
Yeah.
Only the really good ones do.
Yeah, that's true.
Right? And they get people get washed out of the business all the time. So for 18 years, you've never seen this. That's why people are freaking out. And that's why you see, interestingly,
Well, let me ask you a question.
I met with a few people that have been around a while. They're not freaking out because they've seen the cycles before. If you haven't seen a full cycle, and by the way, almost definitionally, in 18 years, you have not seen a full cycle.
By the way, this is proof my phone is spying on me. Literally a second ago, just this alert from the Times popped up. The U.S. national debt hit $40 trillion, a grim fiscal milestone that came amid bond market jitters. This just hit as we were talking.
Yeah.
It's got a mind of its own. It's following me around. But let me ask you this: should we be worried? Is there something existential happening here?
Well,
is this the big one?
Here's something interesting.
Remember
Here's
coming, Elizabeth. This is the big one.
That's San
This is the big one.
I'm going to tell you right now. So Jane Street loses $15 billion. The market shrugs it off. Situation awareness goes out of business. $80 billion.
Are they out of business? Not quite.
No, but you know what I mean. They're not $80 billion anymore.
No,
they're a shell of their former selves.
10. It's pretty good.
But okay, so they lost $70 billion. Okay, and more or less got taken out, even though they survived, but they're not what they were.
Right.
Market shrugs it off. Rates rising. Market more or less shrugs it off. Right. War in Iran. You wrote about it. You said, "Hey, oil's at $80." Market shrugs it off. So what you're really asking is, what's out there that the market can't shrug off? Because it seems like it's priced in everything else. Because business is pretty good. If you look at S&P, and I've said this a gazillion times, if you think the S&P makes $400, you price it at 20, it's 8,000. If you're more aggressive, it's 10,000. So,
right.
The market doesn't feel overpriced. And is it interesting? Paul Tudor Jones was on.
I mean, it's a glass half full scenario here,
well, but
which is sentiment drives the market. And remember, the glass half full is that treasuries might be getting crowded out by this new technology, and thus we can deal with it. It's not getting crowded out because people aren't buying our debt.
Correct. Well, but you see, the real question is, how much money is coming into fixed income arbitrage? The hedge fund industry has gone from, in the last, I want to say 5 years, maybe 7 years, went from $2.5 trillion to $5 trillion,
right,
on its way to $6 trillion. The reason why we are able to fund $40 trillion worth of debt is because there is a basis trade in government bonds, and that is keeping a lot of hedge fund managers alive, but it's also it creates a symbiosis between Wall Street and getting the deficit financed. And Wall Street plays an incredibly important part in recycling money that comes in as investment dollars to keep the debt machine going. So
interesting.
You're really asking how much balance sheet is out there by the banks to support that activity so the government can keep funding itself. Now that's an interesting question. Maybe
Say
there's
that again.
someone's
Say that again. That's an important thing. I want to hit on that.
so you have $1 in capital. Let's say
Right.
you could buy $10 in assets. You need to borrow 9 to fill the gap, right? Okay. So all I'm saying is money comes into the hedge fund business. It needs to get deployed.
Right.
Well, the government is the logical place to go. So you keep spawning, you keep doing this basis trade. The temper tantrum is basically you're raising funding and you're tightening balance sheet on the basis trade.
Right.
And the government we need people to show up at these auctions every month.
And they do.
And they do. Why? Because there's enough there and spread tiny leverage sometimes that gets you to that 8, 10, 12, 15% return that people want, that cover the liability streams of pension funds. Well, if it keeps getting bigger, that $9 in my example, well, it becomes 12, becomes 13. You got to fund it. Funding markets get tight. That's what you got to watch.
And they're not tight yet, you're saying?
And then in June, they got tight because you had like a real tsunami going on. You had $1 trillion, almost a $2 trillion, IPO. And then you had like a lot of bonds hit for auction. There's a lot of demand for money. So yeah, sure, funding markets were getting tight. And then regulators are constraining the street's ability to create ways to get more funding. And 2008 is still with us, right? So in many ways. So that's the thing I think you got to watch. And I think part of the reasons why our data is valuable is because it gives you insight into that funding pressure.
And what are you seeing now?
What we're seeing is that banks have to have conversations with their clients to say, we need you to be good clients, meaning we can lend you money, but you have to be doing the right kind of business that fits the environment. And so those conversations are becoming more prevalent because the pie only has, so many slices in the pie. We can't give you more slices. So to get a slice, you've got to pay so much, and you got to your business has to look the right kind of way for us to actually lend you money. So we're going to get into this more when we come back from vacation. I think this is a show.
Oh yeah,
because I think coming into the fall, particularly quarter end as it comes up in September, that's always a time of funding pressure. We can get it together.
Okay, I'm looking forward to it. A whole show on funding pressures. I'm sure,
because that's what you're asking me. You're asking me like, what's the shoe to drop? That's the shoe to drop.
And what precipitates it? Just like a bank saying no to a hedge fund? I mean, that's the client you're talking about, right?
Yeah.
The hedge fund, the fund that needs
That's part of it.
that needs to borrow to
That's
buy.
part of it. And someone takes too much risk. The trading environment gets destabilized. People get nervous. They raise margin requirements. It's that piece of the backgammon cube, so to speak, that one side of it gets lopsided.
Yeah, and we're not there just yet.
I don't think so.
Okay. That's a good point, and it's something to watch if you're out there, because that's existential. I think not just for the professional trader who's in our audience, but the retail trader who's in our audience. I mean, this is
it's everybody. But you gotta watch that. That's an important point.
Okay, what else do I have? It was something I was going to mention to you. I can't remember what it was. Probably not that important if I forgot. Because I cover so much stuff.
I don't know how you do it.
It's like
you
nuts.
write, but for everybody out there, Charlie never stops working. Never.
I know.
No, it's crazy.
No wonder I have high blood pressure.
I will get pinged on a Saturday and a Sunday, and we always pick up the phone for each other, which is great, no matter what.
That's true.
No matter what. And but he's tireless and prolific. And by the way, great scoop.
Here's something that this is the story I just remembered, because the visage of Sean O'Brien just popped in my head. Do you know who he is? Head of the Teamsters.
Oh, okay.
So I get a call from my people at not my people, but my
By the way,
sort.
our legal counsel is Sean O'Brien. I thought you had a scoop for me.
Oh, it's not exactly an unpopular name, right? I know. I think I grew up with a lot of Sean O'Briens back in the day. But Mr. O'Brien's a very passionate guy, as you know. And now here's what's interesting about him. He showed up to the RNC, right? The Republican National Convention, kind of tacitly endorsing Trump. He's been palling around with the DSA lately on this whole issue of Amazon.
Okay, let's go into that.
He wants them, like the DSA wants them, to unionize their subcontracted drivers, which are these independent people that Amazon, these are small businesses essentially, that hires drivers. And by the way, to do that, you have to provide certain benefits, like healthcare benefits. I mean, Amazon you won't be a registered subcontract for Amazon unless you have health benefits. But he wants to make them all union, and that based on Amazon's price points. I mean, listen, they serve a lot of like average people, like here in Manhattan, and they want to do this in New York City. It's a New York City push. Amazon's going to have to move out to kind of Jersey. So they're outside, their distribution plants. So they're outside. So they can hire Jersey drivers to do this. I mean, it's such a stupid thing because, listen, I'm a union guy. My dad was an iron worker. I love unions. But there is a point where it becomes like kind of ridiculous. And this is
who's the customer? Like everybody uses Amazon. I don't care what economic part of the economic strata you're on. Everybody uses Amazon. So if you're going to make the service more expensive, because Amazon's not going to eat the cost, they're going to pass on the consumer.
Well, it's not even that. The job itself. See, my dad's job was very difficult and dangerous.
Right.
You fall off scaffolds. I mean, he got sick early in his life. I think workplace injuries. Coal miners, get it. Black lung disease. You need unions.
Yep.
Yeah, I get truck drivers. I mean, you don't want to be on the road 40,000 hours a night. But these are Amazon drivers. By the way, they work for a subcontractor. They're not exactly being exploited like coal miners. I don't understand this sort of this other than boosting the Teamster membership.
Yeah. So what's the beef though? What's the beef that they have with Amazon, that they don't pay them enough?
Well, they want them to be union. Yeah, they
don't pay them enough.
Now, the last time they did something like this, as I recall, it was for a company called Yellow. You ever hear of Yellow Corporation? It was another trucking company. And they wouldn't. The Teamsters wouldn't agree. Mr. O'Brien wouldn't agree. The way I remember covering the story, wouldn't agree to some concessions and stuff like that. And Yellow filed for liquidation. He cut a deal, a very good deal for the unions with UPS, allegedly.
Yeah.
And then they started laying people off because it was just too much. You know what I'm saying? It was the sort of benefits out. They had to do cutbacks.
Yeah.
So how's that good for anybody? I just some of this stuff again. I'm a union guy. Yes.
Well, speaking of that,
Yeah.
how about the Atlanta Braves? Let's pick that up. Right, we've been tracking short interest in.
Now put it up. Here's the thing: the Atlanta Braves is the only publicly traded company, right?
That's right.
It's a publicly traded baseball team.
And you look at the short interest in the Braves, it's skyrocketed. And so, our take on this is that no one thinks there's going to be a settlement between the owners and the players
on this collective bargaining thing.
On the
and there's going to be a lockout.
And there's going to be a lockout. That's what this chart says.
Wow. Talk about a short squeeze if they do a deal.
If they do a deal, right? But as we were talking about before, sports in general and how teams get advantage and finance themselves, and the players they get and the way they're cornering players.
Right.
The rubber's going to meet the road here. It's very different. I think it seems like you just have this inexorable force versus immovable object.
You think it's a bubble?
I think they end up. Walking away, and I think the shorts are right here.
How much did Iger and Mr. Kushner pay for the Lakers?
$12 billion.
12 billion. Now you have to realize they could have bought that a lot cheaper because the guy selling it is Mark Walters, who's famously in all sorts of
Everything.
issues, facing everything with his insurance companies and investigations. And by the way, I'm not saying he did anything wrong, not saying any problems here. Just it is what it is, and he had to sell. But they still paid 12 billion for it.
Yeah, they did.
A lot of talk about him selling the Dodgers. Here's what I would say. I think sports franchises, and I think the Yankees, it's going to be interesting what the Yankees are valued at when this deal, they just did a deal with Apollo, and finally we're going to see that story is not done yet. Keep an eye on that story. It's going to be big. My point is, there's a reason why people are paying up for sports franchises. And one reason is that people are addicted to sports because they're addicted to gambling. I think if you were gonna if you told me tomorrow they're gonna do a massive nationwide crackdown on gambling, these prediction markets that are trying to that basically say they're commodities exchanges, and there is some regulation. Kalshi is going toe to toe right now with Tish James. I would tell you that these teams are better shorts, so to speak. Then there is a bubble. But with gambling stoking the interest in this, I mean, it's just so many ways people are watching sports right now. And so they're glued to their screens, whether it's on this or the TV screen or when they're having a beer at a bar. It is what it is.
It is what it is. We've been keeping an eye on shipping stocks too.
Right.
Which, let's bring that up.
Now, shipping stocks is like something that you guys keep an eye on constantly.
Well, what's happened here is that if you look on the screen here, you see
it's a proxy for the Iran war.
Yes, that's right. So that's
how people
exactly
think it's
right.
going and all that.
We probably should have said that in the title, that we think this is a proxy for how long the Iran war, the expectations for how long it will go on, and according to where our markets are positioned today, it could go on for a really long time because the short interest is like zero. And you see that the active long interest has actually gone up quite a bit over time. And so people are betting on is that shipping rates
will go up.
Because
this thing's never going to end.
It's not going to end for anytime soon. And we get even more affirmation of that when we look at the next slide, which if you look at the tanker stocks and where the active money went, tankers are going longer routes at higher prices.
Yep.
And so there's a lot of money rotating into these two sectors. And there's not a lot of short interest here because no one believes this thing is going to be over soon.
You know what? We need Jack Keane back.
He's
our
the
friend.
best.
He's the best. And here's why we need him back.
We got to get him. Would he come on?
Jack Keane?
Yeah. Can he? He may not be able to.
The one thing they told me when I did this podcast with you is don't steal our guests.
Yeah. No. That's why I said, can he? I know it's sensitive.
But I just would feel a lot better if General Jack Keane, who's really smart, and by the way, married to a good friend of mine as well, if he was leading the negotiations, because I just think that whoever's doing it for Trump. There was a Journal or a Time story I read about the negotiations. It just seems like they're being very naive with these guys. Iran turns around recently and said they're looking to escalate in many ways.
Wow. So
it is after we're kissing their ass left and right. I mean, what are you people doing?
I think there's a multidimensional aspect to the warfare that's going on now. Part of that is media driven. Part of it is social media driven. Part of it is sporadically. It's to spread sporadic fear.
Yeah, and the other part is Iran astutely playing the divisions in the MAGA movement.
100%.
There is a huge division in the MAGA movement
between Vance and everybody else.
Vance and some of the more of the isolationist wing who don't want to do any of this stuff, and maybe Witkoff is in there. I don't know, and then. Kind of everybody else, Marco, and who are kind of not asserting themselves in this conflict, and the president kind of caught in the middle, and he goes back and forth.
I actually think the best thing we can do right now is to do nothing.
Maybe,
if you're going to make it the warfare you want, which is stalemate. We can survive a stalemate, but it needs to be sold that way.
Yeah.
Like, look, we're gonna sit there and seal off the Strait of Hormuz, and we're gonna cause some pain and suffering economically, and we're gonna see how much they can take.
Yeah, then
And
do
then,
it.
okay, and then what are they gonna do? They're gonna strike out, but we'll understand, like, where the stress is.
Yeah, when they strike out, we should
Well,
make it hurt.
we should make it hurt a little more. It has to be appropriate, right, or proportional. And this way you're getting into this proportionality thing where you can choose how to respond
Yeah.
rather than just saying, "We're all in."
I think if you explain that, maybe oil will go down to $75 a barrel.
And that's the point.
Yeah.
You give people a plan and a route.
And that's livable.
It is livable.
Then then gas prices go down to 3 whatever.
3 something,
Yeah.
right? And so that's the whole gig.
Yeah, because I don't understand what the fuck they're doing now. With all due respect, sorry for the language, but I mean, man,
Well, I mean, look, when Trump says there's a deal, he's telling you oil go down, and there's no deal, it goes up.
how many
it goes
times
down.
how many times have we heard there's a deal?
Yeah,
now?
but it doesn't matter because it's a signal. It's the most obvious signal to commodity traders
I know,
there's ever been.
I know, but you know what? He's losing he's losing credibility, the president, with this, with
Well, maybe
the
he
way he's
understands
handling
it.
this stuff.
Maybe.
Now, maybe he doesn't give a shit, and maybe he doesn't care about the midterms, and maybe he doesn't care about anything. But he's literally people are starting to like say, "What the fuck am I hearing from this guy again?" I mean, there's a lot of that.
What? You know?
That's not a good place to be.
No, it's not.
Because if Kamala Harris becomes president, man, that's the whole. I mean, they're going to come after. I mean, listen, the people are saying if the Democrats take Congress,
Take the House.
Take the House, he's going to face investigations, which you will.
Which he will.
But could you imagine if they had the House and the Senate, and just if they had
it's a free for all
because of all the crypto stuff? I mean, listen, I can't get excited about Trump's crypto business because you know why? If you're like going to buy it, you don't know that you're making Trump rich.
Yeah.
I mean, that's on you. On the one hand, on the other hand, I mean, come on, you're going to deregulate crypto and then get your family, push your family involved in this stuff. I mean, that's kind of like, it's creepy, but right. But again, there's a buyer beware thing here. I don't see, it's like, I don't get pissed when other people make money.
Right.
I generally get pissed when they unfairly take money from me.
That's fair.
And his crypto business is not taking money from me because I won't buy any of that shit.
Right. Fair. But it's taking money from somebody.
Yeah, but they know the risk.
Well, okay, fair. But the thing that needs to be sold is that tokenization is a great thing for American capital markets. Stablecoin is a great thing for our Treasury deficit.
Mm-hmm.
Blockchain technology, great thing.
For the banking
We talked
system,
about
whatever
funding, capital. That hard to see, but all important part of Wall Street. So let's talk about those things because they're real and they're great. They're actually great for the country.
Well, it's hard to talk about them when everybody's talking about, Trump making money off this shit, and
he is,
and he is.
And then it's a question of: do you want someone to make money in front of you, or do you want to like side deals?
I like the front thing. I'm telling you, I should be more outraged about this. And I have friends of mine who's like, how can you like? I don't give a fuck. I don't care if you're making money. I only care if you're stealing money, and it comes out of my pocket particularly. But if you're stealing, he's not stealing from anybody. He's not. And by the way, he's not the only one making money. A lot of people making money off his thing.
But by the way, so as a country, you have a choice. Okay. Biden, his last days of office, takes $200 billion and distributes it to his political allies.
He did that.
And he did illegally. And you can't go after these people.
Yep.
Or at least some of them. So, all of a sudden, you have people that their NGOs have gotten $1 billion, $2 billion. That's just a fact.
Yeah.
And so now Trump comes out and says, okay, I'm going to cut these deals. And I'm going to tell you about it. It's in the open. They're both not great.
No.
But it's a question of which one can you live with? Which one makes you mad?
I'm more mad at NGOs running around, getting rich off of homelessness in LA, which that does happen because there's a homeless industrial complex. If you do a little research, which I've done a little bit on, I'm more worried about that than Trump getting rich off the crypto. I just don't give a shit.
I think there's a lot of good things coming out of crypto.
I could do too. I think it outweighs the negative. Anything else for us, Bob?
I think that's it for this week. We got 2 picks.
All right, let's get a couple
Let's
picks.
get a couple picks.
And then we'll do a little.
We got a little bit of a controversy over our picks last week, which we had Cisco and Dillard's. So Cisco was up 9% after the close, and then the next day closed down 8%. So, I don't know how to necessarily read that. If you were trading it after hours, you made money on our call, and if you waited a day and a half, you did not. So, we'll say that on the strict definition of how we look at things, that was not a good call. And then Dillard's also, we had a
I say it's a wash.
Maybe a wash, but if you want to be strict about it, that's down. It depends when you were in and out of it.
Right.
And then Dillard's was also, we had a bullish pick, which was not correct. So this week we have a bearish pick. And remind everybody, we're not investment advisors. We're not telling you what to do here, but this is just what our short interest signals. There's a really sometimes very bright and very easy to see signal that comes out of short interest and stock price movements around earnings. Advanced Auto Parts, we were bearish. Prices up over 16% over the last 3 months. But short interest is down about 11 million shares. So, but we see this as a technical bearish setup. And then the next pick, and this will end up. We just have one this week. Okay, so that's our pick for the week. We have a bearish call on Advanced Auto Parts.
Right. Quick and dirty, dude.
Quick and dirty. We got it done.
Okay, so now we're taking a couple of weeks off.
We're taking a couple weeks off for the summer.
Okay.
We're back after Labor Day.
Back after Labor Day. Risk and return returns after Labor Day. You could still find me and Bob on our various social media.
Somehow, I don't think you're taking 2 weeks off from social media. You'll drop another story.
I haven't taken 2 minutes off from social media in a long time. And I'll be writing for the Post and do my thing. And but I'm gonna miss you.
Always miss you, John.
And but we start fresh. This is kind of officially our second year, right?
It is.
After Labor Day, you would say that's a second
year. Yeah.
And going pretty strong.
We get more and more views, more and more followers. The power of social media is a real thing, and we've been living it. And people love our show. They love they love the back and forth that we have.
I know,
we have something very special.
We're made for each other. We should get married. No, I'm only kidding. I don't want anybody to think nothing is going on here.
By the way, you will get some trolling for that for sure.
Good. Come and get me. I'm comfortable in my masculinity, dude. Could say anything. I'm grateful for the partnership, for the business partnership.
I am too, my friend.
Okay. So that's it for another riveting edition of Risk and Return. Signing off. My name is Charlie Gasparino. I'm here with Bob Sloan. We'll see you in about, 2 weeks after Labor Day.
2 weeks.
In 2 weeks.